Hi, this is Kerry Artek with Wicked Stocks, bringing you the daily Apple report for Tuesday, November 15th, 2022. Just a big picture reminder that we're not approaching it, but we are in reach perhaps today of 154.18 if we push through 150.53, which I'll show in just a moment. But 154.18, descending two-thirds speed line. We came close to testing it a couple of weeks ago, and it can contain buying into possibly through December. And from here, we can quite easily fail not only back to this low area, but then some. I'll show that and then some in just a moment. So remain susceptible to bearish rotation into December below 154.18 or once tested. And inversely, we turn bullish into December if we can close above 157.51. This range here is kind of a no man's land, in my opinion, of trend identification. So heavy below the first level, bullish above the second. If we can close above 157.51 by the end of the week, then we have a 3 to 5 week buy signal up to 179.58. And by the way, I want to ask you to please click like if you haven't already each and every time you watch the Daily Apple Report. It helps us out a great deal in being found on YouTube, Wicked Stocks YouTube channel. We upload it every day along with the Daily Tesla Report. And subscribe. Subscribing to the Wicked Stocks YouTube channel will provide you notification each and every time new content has been uploaded for your viewing, which is at least twice a day. And if you would, please share the content with friends and colleagues. So this kind of covers the upside. I don't expect to see 154.18 today unless we happen to push or open above 150.53, which is this former rising two-thirds speed line that has been containing buying pressures roughly since over the last couple of days. So what I have here, if you look at the support and resistance levels, I've got 150.53 as our upward pivot point for the day. If we push or open above 150.53, the 154.18 speed line is in reach, where once again we can top out well into December trade and fall off from there over that time horizon. Now downside, just merely breaking Monday's low, which is the pullback high so far over the last couple of weeks. The low of the high has pivot point qualities oftentimes, generally speaking. And if we break or open today below 147.43, yes, 144.20 in reach today. But we could also continue all the way back into this zone of meaningful support for the day itself, 141.78 to 142.67. This area, FYI, could be and probably will be tomorrow beefed up to a 2-star support. In other words, if we fall over the next few days back into the 141.78 to 142.67 area, it can contain 2 to 3 day selling pressures, which is to say through the balance of the week. And we could consolidate in this zone, low 140s to mid 150s, let's just call it, for the next couple of weeks. But we have for today an upward pivot point at 150.53, above which 154.18 in reach. And downside, if we break 147.43, you should expect, I think, at least 144.20. And if things get ugly, perhaps all the way back into the low 140s, that day range would be a wide one, but we've seen them over the last few weeks, and it is possible. So if tested, the 141.78 to 142.67 area, 141.78, this former rising channel top, just a few days in the making at the time, but it's still a decent zone, and the high of the recent low, 142.67. This area able to contain session weakness. But keep in mind that holding below 154.18 allows the bear to reemerge, bearish rotation into December, and we can collapse all the way back below these recent lows, the 134.37 area I have on the next test as a mere intraday support, as you can see. Bottom line, holding below 154.18 will allow the 120s. Let me show that. That is properly shown here, 124.44. And now I don't know, I think 124.37 may be on the weekly chart. So holding below 154.18, as I've been saying now for the last couple of weeks, allows this area all the way down here to be tested by the end of December, by the end of the year. And I'll say that if we close below 141.78 in the coming days, that is indicated as much. We could see this within about 2 or 3 weeks, the 124.44 level. And on the weekly chart, let's see, where are you? Yeah, 124.37. 124.37 is really the start of a wide zone narrowing gradually, all coming together by the end of the year or into January between down to 117.48, which is a rising 2/3 speed line off that prominent March 2020 low. So, if we happen to test this low area over the next 3 to 5 weeks, it can absorb selling through Q1, possibly well into 2023. Upside, I'll just remind you, and I don't see it happening today, but it might by the end of the week, closing above 157.51, 3 to 5 week buy signal up to 179.58. Now, I think I said this in the daily Tesla report, and I'll take a minute to do so, that my style of analysis, I've been providing professional level, institutional based analysis in the broader commodity markets, especially coming off the Chicago Board of Trade in the 80s and 90s. I work with hedge funds, institutional trading firms, risk management firms, day traders, and I learned a long time ago that nobody really fits into one particular pigeonhole with respect to their trading. Some are aggressive day traders. A day trader might trade every 15 minutes to a half an hour, or they're looking for the setup of the day. Swing traders, 3 to 5 days out. 2 to 3 week position traders, so forth and so on. You can continue to expand. And so what I like to do is really cater to most of those time frames and I think you can. You can actually find the day trade for the day. You can look at the 2 to 3 week position trade, which I've already covered, and the longer term 2 to 3 month investment. So that's why I don't make strong recommendations like this is where you should buy it. This is where you place your stop loss. Stop losses, by the way, risk management, that's a very personal process. It has to come down with your trading temperament, the rules that you like to follow, what is your maximum drawdown, so forth and so on. It's going to be a little different for everybody. So you've got 3 elements to successful trading. You've got market analysis, which I provide, and I think I'm providing professional level analysis here on the Daily Apple Report. But you also have your trading psychology and your risk management. And risk management is the crux to good trading. If you've got good risk management and you've got a system down that you've developed over the years, you know as well as I that is sort of your holy grail, if you will. That is what keeps you in the market and sustains your profitability over time. You can have lackluster analysis. If you've got good risk management, you can still eke out profits on a longer term basis. But if you can combine it with good analysis, which I think I provide, and good risk management, the two in hand are a real recipe for longer term profitability in the market. So I'm digressing here. I don't think there's any else to say really for the Daily Apple Report for Tuesday. So I'm going to leave it at that. I'll be back tomorrow, of course, every day through November with the Daily Apple Report. Please click like and subscribe. I'll be back tomorrow with Wednesday's report, and you have a great day.